the news. What's today? 18th. So, 1 minute. I'm not even sure if I set this to public or if it's our private. What? I don't know if there's any way to check midstream either. All right, well, whatever it's on, it's on. Whatever it's on. If it's not public, I'll just turn it on later. So let's get to this. All right. Like literally within that minute while I'm marking this off, it went up to it and traded away that quick. 80 points. Gee. So let's see. 30. There's no entry. 30-second anyway. 15-second, nothing. There's institutional order flow entry drill right there. Trade into that right there. Let's look at a 15 minutes, see where else we should be heading. 640.
Order filled.
We're through that now. All right. 625. 624. 620. 623. That's funny. 23. $23 at 23. 640. There's so much buy side. The 640 should be, well, would have been the easier target, but I couldn't even catch it. First, 930 open. There's the 930 open. Before this guy just runs rampant, we need to cut this off. Sell side, sell side. Relative equal highs resting up there, so easy target, but doesn't have to be for right now, but could be within the first 9 minutes, so before 336.
Order filled.
Institutional order flow.
Order filled. Order filled. Order filled.
Look at a 15-second. Spam callers. Nothing better to do. Stuff.
Order filled. Order filled.
Stop. Two.
Order filled.
One minute here. Hasn't even reached the quadrant yet. The quadrant is at 765. There's that. 65. Get back to the 1 minute. First presentation. First presentation, balance, price range. Excuse me. Or lower. Step above. Drop after my closed trade. Get rid of that stuff. After I closed my longs yesterday, which bam, stop longs right there, reversed for the rest of the day. But anyway, let's get rid of these trunks for now. Yeah.
Order filled. Order filled. Order filled. Order filled. Order filled.
Let's just get 400 of that back and we'll wait for the entry of that inversion gap there.
Order filled.
There we go. There's the inversion gap entry.
Order filled.
So there won't be a retest of the inefficiency up there.
Order filled. Order filled. Order filled.
Entry drill.
Order filled.
That sell side should get wrecked.
Order filled.
What are we aiming for down there? 23, right? Let's put that at 23 and a quarter.
Order filled. Order filled. Order filled.
$9.50 macro.
Order filled. Order filled.
Should be able to immediately just take out the sell side.
Order filled. Order filled. Order filled. Order filled.
day now, bro.
Order filled. Order filled. Order filled. Order filled. Order filled.
Probably random.
Order filled.
So 950 macro. Let's just go back and look at what I said here. So when I started shorting here, since our target, we did trade over buy side here. And since our target, or our stop loss rather, was right, so we had the quadrant. Move the drawing so I can actually see what I'm talking about. So we had the quadrant right here, which that was like our stop loss target. But then we also had 930 open as fake sell side delivery, run on buy side, taking out these highs. All these relative equal highs right here, right? And the highs right there. Took out highs. Then we traded into sell side again. We made a swing low here. This first inefficiency that did not send price lower, but we in fact traded above it and took out liquidity above it. Once we start trading back towards that inefficiency, which I don't know where it went. I could have sworn I drew this out. Anyway, so when I short here, you'll remember that once we made that wick, and then I could have sworn I drew it out on this one. Okay, so I didn't draw it out. I didn't draw it out here, but I set it over here. So basically, this is how I was viewing what was going on. I saw that, and then I said, if it's not giving us an entry all the way through here, then that's the entry, basically. So to get short towards sell side, and it didn't have to, it could, but it did not have to come up to 50% of this range. That's why you saw me draw this out. You saw me draw out this, and I was looking like, okay, this is 50% of the range so far that we're at. So if we want to come back up for 50%, we'd have to come up here. So that's why my stop was way up here. But we're looking for that sell side that was recently engineered to get ran through, especially since we were now back through into the bottom half of this. So that's more reason for us to be looking for this inefficiency that initially did not send price lower. Its price went higher off of it, took liquidity above it, and now we're back under it. Now I'm looking for price to stay under it and for it to send us lower. So not just that sell side, but the numbers we looked at earlier, like 23 and 20. So, which we got those targets from, where was that? Okay. So this is where I got those targets from. This was earlier when we initially had 40 as a target before the giant retracement, but that's the close of an opening range gap. So this, show you now where I got these other, so right here, this inefficiency. So look below this purple line. So just look over to the left, right? As we look to the left, we're looking for an inefficiency. Don't mind this magnet. Let me turn it off really quick. All right, so put a horizontal line right at the bottom of that purple. Excuse me. So that horizontal line right there at the bottom of that purple, we're going to look to the left of that in price action, and we're going to see where we see an inefficiency. So as we go back in time here, we're looking, those are wicks, that's a low, those are wicks. Now we're going to go further left again. And even this here, this is above the purple here. Draw. Oops. What? What did I just click on? Am I tripping, y'all? Did I really click that line? All right, so this right here, look at that inefficiency. Where is it at? It's above where the bottom of the purple ends, so it doesn't matter at all. We're looking for the next inefficiency after that. So going down, you can just look through all this price here, right? As we're going down below this black line, where's the next inefficiency? Right there. So technically there's a volume imbalance right there. So that 25, but right here at that buy side imbalance, sell side inefficiency right there. So that essentially, right? And these prices, let me turn the magnet back on. So if we look at that closing price and this opening price, there's like a tick of difference. Zoom in so we can see what I'm talking about. Let's put that somewhere. So as I zoom in, now you can see what I'm talking about with this difference here. It's really tiny, but it matters. So that right there, this right here. So 25 cents, one tick worth of difference. It's important because it goes from, instead of using this and this, what is going on? That as your inefficiency, then you're really supposed to use that as your inefficiency because you have to include that volume imbalance. So, but anyway, if we just take this over, that thing is absolutely melted. Like who knows how many more. Oh, look at that. Was there 10 o'clock news? Or is that just a macroing? 10 o'clock news, pending home sales. So anyway, this inefficiency was our target, sell side target, right? And then the one under that would have been, oh, I'm tripping, we were on a 15-minute. I'm tripping, we were on a 15-minute. We didn't find, we didn't look for a 1 minute. But anyway, oh, this is, I mean, it's not the same thing, but we'll just move that out of the way. So you see on a 15-minute, we literally still have this inefficiency right here, right? Did I just draw that on a 1 minute? I'm tripping, y'all. I didn't get that much sleep last night. Sorry. All right. There. That's the inefficiency. It's probably the same thing that I just drew. Yeah, it was. So, and then next after that would be right here. Oh, well, the next thing after that would be what's the lowest part of this other overlapping inefficiency. So that price is at 614 and 3/4. This price is at 614 and a quarter. So to finish filling in that inefficiency would be my next target after this gap here, after that inefficiency there. So, which as we can see, that was reached. And now we're once again in this inefficiency. We've traded up into the premium half of this range that previously did not have any trade back into it. So sell side has been traded into and then purged. Well, not purged as of yet, so to speak. Unless there's closure above this inefficiency, and then I see this turn into a, what's the word, inversion fair value gap, then I'd be looking for a long. So far we just have sell side, we have more sell side, we have trade up, which could be like market maker sell model. So we went into the buy side here. It could very well just sell off here and come take the sell side and dig deeper into the sell side there. Or it could be, this could be reclaimed right now and it's actually doing its job as sending us towards the sell side. Use one
Order filled.
to finish rounding out here. We'll take that sell side right there. And then we use the top of this inefficiency for a stop loss. Oh, I know they didn't just put your butt down there, bro. All right, I'm gonna put this stop to not break even, but to right there.
Order filled.
Ooh, gotta be quick on that draw. So look, I closed that out manually, and then it came up here. So 10:07. If y'all know about what Michael taught about 10:07, there's usually the manipulation, like the manipulation run, manipulation candle that comes in at that time. So as I'm looking and I see it's 10:06, I'm like, yeah, nah, it's not. Like the next minute, in the next minute, it's bound to do what I don't want it to do and run for, even if it's gonna take out the sell side. Just the fact that at that particular time during during the macro that it's gonna form manipulation. So therefore that could mean it could be retracing. Look at this. So So good thing I closed that out when we did, because that'd be $80 right there, gone at this point. So I wanted to go into work super early today. Here comes sell side now. I wanted to go into work early today, and then time is that 55. Sell side dropped down on itself before it even took any intermediate time towards highs. Mm, yeah, this should be the sell side. If it breaks below that, then it's definitely taking out this low. But I'm already somewhat convinced that it should be taken out this low right now anyway, but without enough price action in here to kind of confirm it, it's not worth taking it, because I don't want to sit in. We're still in the macro, and after when macro times end, there's usually like it's either aggressive run to one side, or it could play around and engineer liquidity towards one side. So instead of running this sell side immediately, we could have something like, oh, run up here, time distortion, drop down, do all of this. And then finally later it says, oh, you were right, I'm not taking that out. And then it come down and take this out. I'm not about to sit here for another 30 minutes and wait for it to come take out these lows, just because, like, I'm not that thirsty to jump into the trade right now. So you see how, look, it's teasing right there, right? So, but it's fine. We hit our $50 minimum for today. So there's one. There's that sell side. Any day now. So look, the macro just closed just now. So it could very well engineer liquidity right here and make a relative equal low, or it could just finish its business. There we go. There's the sell side. So from that point, that was 34. So one micro, that would have been $70 right there in that 2 minutes. Taking that short there. Because look, it's already, so this is reclaimed, like we said. This inefficiency that was supposed to send price lower, did it? No, it went higher. Traded down, took liquidity. But then I said, okay, this could be reclaimed here. And I said, I'm not going to look for a long to go higher unless it gets above this and closes above it, and then starts using it as an inversion fair value gap. So that would look like this. If it were to get above this and then leave liquidity and then trade above and come back and sweep that liquidity, then that's when I would be looking to get long. But we said this should be being used as an inversion right now, as in this guy right here. And I mean, not inversion, sorry, reclaim. So reclaim meaning now it's going to do its job it was supposed to initially do, which is send price lower. So right here, we already have sell side imbalance, buy side inefficiency that's supposed to send price lower. We have liquidity right here resting above 50% of the range, and we know that's 50% because you can eyeball it. So there you go, right there. Where's 50% of the range? Right here. So where's liquidity above that? Right there, that high, and there's inefficiency. We have two inefficiencies, two layered sell side imbalance, buy side inefficiencies in the same spot. So that's one and two reasons of why we should be going short. Plus, we took buy side liquidity. Plus, like I said down here, this created all this market structure before it ever even took any intermediate time high. So it's basically like just getting you to think, oh look, it's already took liquidity and come down and did that, blah blah blah. Like, no, this is market maker sell model, which is go up to go down, basically. So strong up, traded into that inefficiency. Notice the body is not even getting into it, let alone closing in it. And then trade down lower. We have, oops, box actually. So we have an inefficiency here, SIBI right there. Oh my goodness, end of everything. the SIBI right there, right? We also have high, and then this wick, and this is the last series of up close candles. So whatever happened in this wick was the last little bit of push that pushed that up there. So that wick, grading that wick in quadrants, then so grading that wick, we have the inefficiency that's lined up right at the 75% of the wick. Over the last week and a half, Michael's been teaching about when you grade ranges, and then when you have particular PD arrays that are lined up on the or on these quadrants or octants, like if you're dividing by 8 or 4. But as we see here, it's lined up perfectly in a quadrant. We see that in that inefficiency, look at the half of it, the body's staying relatively in the bottom half and not, they're just going above just to tap into that other inefficiency. Body's not closing below that, then that's showing a sign of respect to the inefficiency. This wick showing a sign of respect to the inefficiency. And so all of that is why right here I was saying we should be running this sell side right now, because we already had 1, 2, and then 3, 4. Let me move this over there. All these reasons where we, like all these signs that showed us why we should be going lower. This big SIBI, this SIBI, running above this buy side, that's 3. Trading into a BISI while running into the buy side, that's 4. Displacing, leaving the sell side imbalance, trading into the sell side imbalance, and wicking into that one, that's 5. The body's not closing outside of that, that's 6. So by the time price is right here, you already have 6 things that happen. Let's say from there when the liquidity was formed. So within the last 20 minutes, you've had 6, you've had 6 things, 6 different pieces of price that we engaged in the last 20 minutes that showed you, hey, we should be going down towards this low right here, this low that formed. All right, macro's over. I'm probably gonna head into work super early today because I'm not trying to get off late. So I'm just gonna cut the stream here. I don't even know if it's public or not. Uh, I don't even know where I could have checked that during the stream. I guess I could have just pulled up my phone and just looked to see if it was public. But anyway, that's a wrap. Hope y'all learned something. Let's see, we went back, we covered all of that. There was the 9:30 open. Oh yeah, that was the other thing there, right? So that was the other thing. 9:30 open was right here. And I'm pretty sure I drew this out earlier, but I must have deleted it. But anyway, 9:30 open was here. So when we look at, okay, we got sell side, buy side, sell side, and then we look, okay, we're above the 9:30 open. So once we get back below it, then we're looking for whatever liquidity was already developed there or engineered. So that trade lower, that's one thing. But then once we come back in here for a retracement, and we're doing that above the 9:30 opening price. So once we trade back below that, that's more reason to be looking for, okay, we're going to continue towards the sell side. But all right, that's it for real this time, y'all. All right, have a good day. Hope you learned something. Take it easy. Oh, actually, let me pull up the calendar for these. Oh, don't tell me none of that got caught. Oh, okay. All right, cool. Let me just turn this off really quick. So the calendar here. So to get over to the calendar. So these have 4 days. Uh, so just 4 days on these guys. Copy. That's the third one with the 4 days. And then this is the one that I started before the other three. So that's why it's called Solo Dolo, because I was working on just that one by itself before I integrated these three into the fold. But all right, yep, that is it. Um, yeah, I need to get some sleep. Oh boy, oh boy. Yeah, we get some sleep, and y'all have a good one.